Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market volatility returned in the new year as investors' euphoria turned into a big trap. Stocks edged lower into the new year as the U.S. announced the signing of the Phase 1 trade deal would come on January 15th, though China's been pretty silent about that. Investors locked in some of their huge gains from 2019 as the market slid a little bit early in the week. It was kind of a buy the rumor, sell the news type trading. Thursday, when we came back from the holiday, buying returned in a big way as China announced more stimulus. Stocks, they got some bids, then they waffled, and then in the last hour on Thursday, there was huge short covering as traders and shorts scrambled and pushed the market up to another all-time high, closing up around 32.58. That's going to be a big number to remember, we believe, as it may be tough to surpass as it gets right up into that resistance area target zone we had. Friday, however, brought a big downside gap. Actually, Thursday night after the close, sellers came in a big way as the news came out that the U.S. killed a leader of the Iran-Quds force. That's Major General Soleimani. In a drone strike. Sorry, I didn't pronounce your name if you're hearing me anywhere. This guy was in a mastermind of the campaigns in Iraq and Syria and Lebanon, and the U.S. saw him as a terrorist, planning to attack Americans in Iraq and in the Midwest. He was a hardliner. China and Russia criticized the U.S. For this, and we had some trade going on that was kind of a flight to safety bid, and as we had airlines move down on oil prices moving up. So there was a lot of movement that we saw, and a big downside movement. The indexes, the S&P 500 was down over 50 points at one point. Light crude up over $3, as of course there is fear that there will be oil disruption. Gold popped well over $20, and the bond market jumped about 1.5 points quickly on that news. So there was a very fast reaction, and it might all be, of course, that, well, the stock market was just at a crazy level of valuations and ready to go down anyway. As Iran comes out and threatens revenge, what could that look like? Well, it could be they try to block the Straits of Hormuz. That would be temporary, as the U.S. would move to unblock it pretty quickly. And we think that this panic price in oil won't last, and nor will the upside tick that we see in bonds. Stocks, however, we find that that upside that they were able to capture or recapture on Thursday may be tougher to get back again. We think it's going to be rougher going for the stock market. We expect that we'll get a test of that 3260-ish level in the next couple of weeks. And then we're going to enter a much riskier period for the stock market. We talked about that probably mid-January to the third week of January would bring a peaking in the market, and that the market had some trouble for some sizable decline into the March time period. We're still thinking that. You want to see our bigger picture analysis? Watch the New Year's show that we did. just a week ago for the big picture analysis that we did in the 5 major markets. Go back and watch that. If you haven't watched it and or if you have watched it and you want to just get some recap on some of the things we said, and based on the present levels that we are in the stock market, we would say that 1% on the upside versus 8 to 12% on the downside is the risk-reward ratio right now. Get that? That's about an average of 1% to the upside and about 10% to the downside. 10 to 1 negative risk-reward for the market. That's what we're giving it right now. So for investors, that time to lighten up, well, it's now here. Stocks for the week, nearly mixed. The Russell got the worst of it as it opened the year with some pretty good selling, despite the fact that the rest of the market moved up. Bonds, 30-year up 1 point, and that all really came on Friday. 10-year yields move up about 7 basis points on the week. Gold market up about $34 on the week. It's mostly Friday, which even though it's backed off some, up about $23 at this point at midday in the market as we're doing this show. So good gains for the gold market. You know how bullish we've been on the metals. And the dollar down slightly on the week, and it recovered on Friday, a rare day where the bond moves up pretty strongly, where the dollar moves up pretty strongly, and gold moves up with it. It's only because of a safety bid, and that proves that there's a safety bid going on in the stock market right now, despite the fact that Iran, though it could kill people, which would be a horrible thing, really does not have that much reach. And it's not likely that China and Russia is going to get the world into a huge turmoil, joining in Iran in any kind of a war. So this time period is likely to come and go without a ton of real war action going on. We might see a little bit more, but I don't think that the markets are going to really be moving heavily based on this news. Oil market did move pretty sharply on that. In fact, it was down on the week until Friday as tack, and then up about $1.50 for the week right now. So the oil market gets a big pop here on Friday on that news. And again, we've seen this happen so many times. 45 years I've been a trader. Yes, I was trading with the oil crisis in the 70s. So that's when I pretty much started out. Interesting, oil crisis in the 70s, impeachment in the 70s with Nixon. It's kind of coming full turn, isn't it? That's it. Follow me on Twitter and be a YouTube subscriber. Give me a thumbs up if you like this video. If you give me a thumbs down, make sure you tell me why. I always want to be better. And those of you that just like to give thumbs down will just get lost. That's it for the opening, and I'm going to now move into the best and worst stocks for the week. Now, a little bit of a reminder that when I do the best and worst stocks for the week, what I'm essentially bringing you is our analysis on weekly charts. And when I bring you the short-term view, we're going to look at the daily chart. So I'm doing cycle analysis. And if you want to understand cycle analysis, take our cycle analysis workshop, or I explain it often in a lot of these videos. So go to the askSlim site, look up cycle analysis workshop, and you will get a little intro when you go to that page, no cost at all. So you can go watch a little video there and get a sense about the cycle analysis workshop. So we're going to switch over to the best and worst stocks for the week. There's not really much here on this holiday shortened week that had any giant moves. Some of the oil stocks were firmer because of oil ticking up. Let's take a look here as we switch over, and I'm going to leave that SPY chart because I really want to show you Occidental Petroleum. So here is the weekly chart on Occidental Petroleum, and you can see in here there are cycles. That's those brackets on the bottom, and the chart that we're looking at here is Occidental, and Oxy gets about an 8% uptick on the week. On top of the oil move, analysts have upgraded this stock And we see it moving up in here to this resistance zone right over here. That's between 46 and 47.75, getting up there. And then if it manages to get up there and then back off and not make a new low between now and April, it will be building a base. Problem is that you can see a negative cycle here. In other words, it closed lower than it began, and a cycle is measured from low to low. These are the average lengths of the cycles in here when you look at that. And now what we're looking for is trying to end these negative cycles that were going on. The stock moves from 87 down to 37, incredible. And, this is a major integrated oil. At some point, the stock is going to look better, but it's going to have to do work in here, build a base, get up above 48. But right now, we don't really see that going on. So Oxy, we're going to see if it can build a base over here over the next couple of months. Right now, we think the best we're going to see is about 47.75 in there. So the best stock for the week, up 8%. Of our 300 plus stocks we follow is Occidental Petroleum. Now, also going to look at a couple of defense stocks, because the defense stocks got bids today on this killing of this Iranian commander. And we'll take a look at how they acted and what we see for them. So here's Northrop Grumman. This stock gains about 7% on the week. Now, this is a classic in here because you see these are what we call the harmonic family. So you have this dominant cycle right in here and two minor half cycles right in there. So you can see the minor half. I'll trace that out for you here and here. This couldn't even decline. It was swamped. It was bullish. The uptrend was really strong, so it exploded to the upside. It then corrected into this period right here, as it was supposed to, into the buy zone and ticks up pretty significantly. We are now projecting that it probably will go up to that 78.6% fib. That comes out to about 391. But then there is that target zone up over there that starts at about 405. So this stock is only 3 or 4 weeks into this advance right over here. And you can see how long these advances have lasted. Even in a bearish cycle right over here, it lasted about 6-7 weeks. So we think that Northrop Grumman has got more upside in here. Were it to pull back, we'll be looking for a buy entry in there. As our trade ideas, look for the highest quality entries. Here is Lockheed Martin up 4% on the week. It's already entered that fib target zone. It's got slightly shorter patterns than Northrop Grumman does, and still you can see it's been very bullish. So a positive cycle, swamped, no decline, a positive cycle, barely declined, and then made a new high. Good cycle gets you a new high, good cycle gets you a new high. That's just the way these risk rewards work. Lockheed Martin 4% up on the week, and all of that is about the U.S.-Iranian situation and the Mideast tensions. Gold's got a bid again. Now, I think that the gold market is going to take a bit of a rest in here. I'll show you a little bit more about that later. Here you could see these projections in here. We were very bullish in these gold stocks, and here is Anglo Gold, and this stock moving up 6% on the week. It's, the stock could make 24, 25, and based on these patterns, we've predicted a higher high coming in here. There's that 1.61.8% fib, and that would be at around 25.5. So that's kind of our target for the near term. And there, nice return to bullish momentum in that one, and good gain for the week on the gold move. Again, we think that the risk rewards now are no longer all that favorable for these gold stocks that tend to move ahead of the gold market. They certainly did with a bigger percentage. So we still think there's upside, but the upside limited, and there's going to probably be some better entry levels in there. Newmont up about 2.5% on the week, and we think for that stock also we're getting pretty close to stalling time. Baidu, B-I-D-U, is the fifth stock we're looking at in the best of the week. Now this moved up on the China stimulus, and I love this stock. I really do. You can see it had that little inverted head and shoulders bottom in there as the minor cycle right in here could not get to a new low. That's a bullish occurrence. It's now moving up into these resistant zones. I could see it easily getting to 150. It's moved up here from this level over here, 100 to about 135. But we still think there's more in there, and even more after that. I don't like U.S. stocks, you know that, but I do like foreign stocks a lot better, and I think Baidu could set up some bullish patterns in here. So we'll be looking for entry levels in there in the Baidu pattern. This pattern right in here, you'll note that here's a minor low period right in here, and another one due right in here in a couple of weeks. So a minor little dip in here probably will set up another big move. Baidu, I really love it, to tell you the truth, and I think there's going to be some decent buying opportunities. In the worst stocks for the week, and again, we're going to be looking at the cycle analysis on these stocks, and we see that SunPower, which has been a really bad stock, which tried to rebound, actually has now headed lower again, SPWR. They're cutting 3% of their workforce. That's really not a good sign unless they're really doing some great cost cutting, but nobody's upgrading this stock, and it's really a bad stock. We were confused over here. We thought there was a significant low, and then it went up and made this kind of double top, and then it broke and extended down the cycle. So that rally that we got in here didn't even get to this 23% level right there. This is really a bad stock, a momentum pointing to the downside in here, and then just curling up by a little bit. Man, if this momentum turns down and we break this low at 683, that's going to be a really bad sign. It could be headed back down under $5. So this is a big disappointment in here. I did like these solar stocks, but they're acting pretty sick. So bad stock, and stock the worst of our group that we look at, down 9% on the week. We're going to look at 3 retail stocks right now that did the worst in this group, and they were down. Bed Bath & Beyond down 8%, Foot Locker down 7%, and Dillard's down 6%. So let's take a look at those. BBBY pulling back after a big gain. So when you look at this stock, can you just take a glance at this and say, boy, I understand why this is a good stock? Yes, for the moment, it looks like we could get some pullback, some more pullback. As a matter of fact, the cyclic patterns in here that we're looking at, remember the rhythms, the heartbeat of this market, point to a corrective period down over here into February. So we look like we've turned down over here. You've got these 3 high waves or wicks there, and we look like we're going to come down. But if we do, we get into the buy zone here. So we see the stock potentially getting under $15 into this buy zone, but then heading up again. So we could see, we're looking for the stock market to have a weak time into March. Maybe March is the time that we're looking for this to be a good stock. This green zone is the rising phase. Look how long it is now compared to this green zone over here. When you get that, the probabilities of another favorable period after a yellow correction is very high. I mean, better than 80% that you're going to pull back in here and then take out this level above 1765. So we're looking for a potential of 20 in the stock with a potential buy of about 15. So put that one on your radar for a buy sometime late February, early March in Bed Bath & Beyond. 8% down on the week. No news, just correcting. And we say that there is a long side entry coming for position traders, longer swing traders, investors coming out there late February or March. Foot Locker, this stock also down on the week, 7%. This stock may be basing also. So we had this little head and shoulders projected down to this level, easily made it. And here's your low of the cycle here. Can you see where the lows are? Here's your cycle low right here. You can see that. Rallies, comes down, cycle low right here, establishing an uptrend as it was a higher bottom. Comes up, rallies, and then fails and breaks the low. That then gives you this projection down to here and breaks all the way down to here. Hits the sell zone. This is the area we want to be shorted after that negative pattern, and it was perfect. Now, we look like we're going to come down for 3 to 5 more weeks into that maybe mid-February period. That, in our opinion, would be the place to be buying the stock if you did like buying Foot Locker. I don't particularly love the stock, but I could see it move from 35 back up to 45, which again would be a 30% plus gain if you wait for that favorable entry that we see in there. When we put in trade ideas, and we put in between 1 and 4 of those a day, we're always looking for the highest probability. We're going to give you our entry zones and our target zones. So that's for level 3 and 4 members. So that's what we really do. We want to give you the best probabilities of being profitable in your trades by giving the proper entry levels, so that you have less chance of getting stopped, less chance of getting into an emotional funk as things go wrong. So that's Foot Locker. We're going to wait for a buying opportunity coming up in a matter of weeks. Dillard's, similar, yet has a little longer patterns in there. So this points to March, early March, before that low is due. This one moves down 6%, and again, no news in any of these, just giving some back this week. And this is your buy zone that we identified in here between 66 and 62. And then after that, we think it moves up again. So Dillard's a pattern that is just choppy and moving in this wide range between low 50s and mid 80s. And we think that the next buy period is coming up here towards March. So again, I wouldn't buy it yet. I don't know exactly that I would look for a short trade in here. I don't really see anything there, and it's too close to the buy zone. So I think patience again. The stock again down 6% on the week. Airlines took a hit today. The airline group moved down on the higher oil prices. The one that moved down the most was American Airlines, which is down about 3.7% on the day. And let's just look what's going on here. You can see this big downtrend in here on these cycles. I know it's a messy chart, and some people call my charts dirty. I know. I don't like when you do that, but too bad. My charts have got a ton of information in them, and what I see in here is this big downtrend ending, and now the momentum and directional components changing and then curling up. So it's getting back down to this support buy zone right over here. I think we're going to see the stock move up from this area around 28 up to about 32 here in the next several weeks, and then have another downtick. So I think there's a 4-point trade potential in here on the upside. American Airlines down about 7%, maybe 6% now in the week because it's rebounding. And we could easily see this stock moving to the upside again. So that is a look at the best and the worst stocks for the week. I've got some great stuff to show you in the short-term view coming up, and an expanded version is we're going to be examining the sum of the evidence as we look at now 1 to 3 week perspectives. We've changed that right now. But I want to tell you about our Level 2 membership and what that includes. Take a look here at our live stream. This is incredible. This is our stock index report live stream. This is you're looking at this live right now at around midday here on Friday, January 3rd. And of course, the markets opened down pretty significantly. And you can see we got down close to that area of support right there. We absolutely tagged it here on the Russell, and not quite getting to that level right over here. We're going to show you support and resistance zones. We're also going to show you acceleration zones, which is the place where these markets can move up or down very sharply when we get into. And that's how you maximize trades. S&P 500, NASDAQ, and the Russell. This is some of the best information you will ever see. So now we're getting this rebound in here, as you could see in the market, and getting up into these key resistance zones. And the probabilities are growing pretty strongly that we're going to see the market not be able to get a lot further up past these levels and then reverse down again. Now, when you get a rally going against the reversal scout, which is a momentum indicator coming down, there's a pretty good chance you're going to see some downward movement coming again. So this is an amazing live chart that you can have just by becoming an askSlim level 2 member. You don't need any special platforms. We're going to send this to you every single morning, and you will have this great information. This is for stock index traders, and we focus on these 3 indexes every single day. And we give you a very extensive look at these individual markets as we send you every day our information on the stock index report. So you're going to get these, the live stream, you're going to get the supports, resistance, acceleration zone, the reversal scout. That's all going to help you find the locations where markets are going to reverse or they are likely to explode through key levels. You're going to catch those big moves, and very likely you're going to be able to improve your chance of not being against the big moves. That's the key. Catch those big moves, make a bigger winning trade, avoid being on the wrong side of those, and this helps in a tremendous way. So that is a picture of our live stream. You're going to get in our level 2 trial, which we're offering you right now, everything that's in level 2, the stock index report daily. That's an extensive look of our charts and also commentary on each of those indexes. You're going to get the stock index report live stream that I just showed you. You're going to also get nearly 500 videos in our library for traders and investors. You can just binge watch in there all you want. In these trials, you're going to get Future Speak and Market Week minutes. That means that if you like our Future Speak show, our Market Week show, you're going to be able to go directly to the point of the video that you're interested in. Plus, we give you commentary on those. Find that exact spot on each symbol that you're interested in and go directly to it. Plus, you're going to get everything in level 1. Our stock index report weekly report. This is more position swing trade investor focused. Our ETF review on the very key ETFs with all of our charts in there. And coming soon, our momentum tracker for investors, absolutely spectacular. You're going to be beta testing that with us when we get this next version up. All of this, look at this unbelievable amount of information that you're going to be getting with that live stream. All of that you can try right now. Write to Matt for our special links, everything in level 1 and 2. Try it for 14 days for $14. Wow. 14 days for $14. Or take a whole 3 months trial for just $74.25, and you'll really get a good feel for it. Write Matt at askSlim.com. That's Matt at askSlim.com. He's going to show you all of this. He'll even offer you a walkthrough if you want that on how to use all of this information. So just fantastic stuff, as you could see, and especially if you are an index trader or a short-term trader in the markets and you want that key information, that you will be able to get that right there. So that is our level 2 trials. Make sure you sign up for those right now. If you are a free level member, or if you're a level 1 member, then you can upgrade using the trial and take a look at everything we have offering there. Or if you're a new member, never been a member at all, just this is a great opportunity to get a great peek at what we do. All right, so speaking of what we do, we're going to take a look here at our short-term view of the coming markets. For the next week to 3 weeks is what we're looking at for our short-term view, and we're going to switch over now to our daily charts and start out by looking at /CL. Before I get into this view right over here, one comment is that my accountabilities now are really going to be looking at what I said about the sum of the evidence for this 1 to 3 week period. Now, I did this 2 weeks ago because in the middle we had the year-end show, and I would rate myself 85 to 90%. We really, really captured the essence of the sum of the evidence of all of these symbols that we're going to show you right now. And let's take a look here at light crude. So light crude gets a big pop, and you can see this right over here as it gets this what's called an upthrust above the channel and then comes back down to it. I commented early in the show, I didn't think that that move was going to be real, and we now have oil giving back a ton, more than half of the gains that it had. So we're going to look for a potential for another attempt to get out over here. But then we think it's going to be moving down through January in this pattern and maybe coming back down to the bottom of this upward channel it is in. So choppy period in here, probably stalling above that 64.50 area. And not likely to make that resistance above here at about 66.60. So, really that's the area we think it's going to continue to stall in. And more downside risk than there is upside potential. Some of the evidence really suggests that we're going to get a move down as low as about 61 as it hits this intermediate resistance, and we think it's going to hold it there. But correction's probably going to be mild, and then a much worse time as we get into February in there. So not a lot of upside potential as we look here in the light crude market. Let's take a look at the gold market, which has given some of its gain back, but not quite what we're seeing in here as we saw in the light crude market. So we think that what the patterns look like over the next 1 to 3 weeks are maybe some further attempt into this resistance zone, but then moving down again, and then over here in January, February, having another shot at getting above these highs, maybe up to about a level of 1573 up there. So we think 1555 to 73 is the stall area. We think it's going to pull back here under this 1520 level into the late period of January right there. So this decline in here is likely to set in some number of days for some downside correction. Some of the evidence really suggests that we have an uptrend in the momentum, as you can see, and it's really expanding, and that upward trend is only going to bring some minor corrections in here and then moving up again. So 1520 is kind of my buy target in here when we look at that. Now, as I said earlier in the show, the dollar moved up as the gold market moved up, which is pretty rare. I thought that dollar move was bogus, and you can see in here as the dollar really starts to move back down in a big way. We could see it potentially trying to get back up to this area of about 97.10, but that really looks like a very, very tough spot for it, and we think it's really in that area would be a sell if it tried to get there again. Momentum negative, as you can see right in here, and that negative momentum suggests that the sum of the evidence with the breakdown under this key level right over here says that we're in a downtrend, and that downtrend lasts into late January before it can really get any kind of a bounce, and we still think the dollar is going to remain weak, and that weak dollar being overall supportive to the metals markets. Take a look at the bond market /ZB. This market got a big pop into the sell zone that we see moving up here. This is very likely to hold it. This is about how we saw it acting, getting that bounce. And we think that over the next few weeks, it's kind of just going to chop in here and eventually work its way down again. Momentum negative, as we see clearly in here. Negative momentum and a projection oscillator that's overbought suggests lower prices. I just before I started recording this show shorted some bonds, so I think that we are going to get a downtick in there pretty soon and give back a lot of these gains that we see occurring here on this flight to safety bid. Overall, the sum of the evidence really talks to about a downtrend, and this rally failing and this decline moving it down to somewhere under the 55 level as we get into this period and here into late January, early February, with maybe a potential moving under 154. So 155, 154 is my target, and overall a pretty bad looking pattern in there. So I'm just going to show you something I normally don't show you, and that is the TNX. This is the 10-year yields, and you could see the cycles in there. I want you to note that when you get to the bottom of a cycle, right, like this, and yields are moving down, the odds are high yields are going to move up again. In other words, Treasury futures moving down right here, right here, right here, and right here. This is one of the reasons I look at this in the short term. It suggests yields are going to move back up or bonds are going to move back down right there. That is another good reason to be considering the short side of the bond market. Some of the evidence says downtrend, move down into early February below 155 in the 10-year, in the 30-year, or maybe even below 154. That, in my opinion, is a sell zone that we have marked there. Stock market, SPX, we're going to take a look at that. And the stock market gets this decline and then rebounds. It was down over 40, now down only about 15 points. And this, to us, really looks like it's going to move down one more time, maybe a couple days, and then try to move up again. We're really looking for kind of a choppy period, not much downside. If we get lucky and we get a hit down to under the slim ribbon right over here, that would take you to about 3,200. Top of this is about 3,285 in the next couple days. That would be, in my opinion, a good long side. And then moving likely up into this mid-January to late January period. That's when we have a shot at getting past this area of 32.58 into this area 32.85 to 33.02. That's this period right here. That 32.58 may be tough. And the market rebounding strongly today, but I wouldn't be surprised if it gave it up again. And we saw sellers into the early part of next week down towards the bottom of the slim ribbon right over here. You can see this cycle right over here broke the slim ribbon, hit support, and then moved right back up. This cycle, however, was strong, hits the center of the slim ribbon, and then moves up. So I think we're going to see a little bit more correction than we're seeing right in here, and then move up. Some of the evidence, minor pullbacks only, another attempt at all-time highs, and momentum remains strong in there. That is a look at the stock market, which you could see rebounds strongly off of that low, as there is very little that seemingly can't hurt this market. That is the short-term view for the 5 major markets. That's the end of the show. Don't forget, write Matt at askSlim.com for our trials in level 2. We also have trials in level 3 and level 4 if you want to look at those. Just amazing amount of content that we put out at askSlim.com here. Our trade ideas have been overall spectacular. We've gotten quite a number of members writing to us about that also, so you want to be a level 3 or 4 to get our trade ideas, which come out daily. So fantastic information. I hope you love this show. I want you to be so careful. It is so crazy out there, and we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show.